Hello, everyone. Welcome back to Zeros TV and another monthly update with Ivan Chosevich of Breakout Point. Ivan, thanks for joining me.
Thanks, Mike, for having me.
So, give us the quick rundown. What happened in the world of short selling in the month of May?
Sure, Mike. So it was a busy month. We are coming into the summer, so maybe some are, putting out the reports before we go into summer lull. And we have seen 12 new reports in May, and already three new major reports at the start of June. So altogether, 15 reports. So these 12 reports in May are very comparable to what we have seen to 2021 in May. So we have seen 11, so 11 versus 10. So there we are approximately the same pace. Out of these 12 in May and 3 in June, so altogether 15. Most of them, as always, so to be precise, 12 focused on US companies. We had two focusing on Canadian companies and one on European company. Yeah, so that's when it comes to the numbers. I know you always ask about the performance as well, so maybe I could tell you how that went for activist short sellers in May.
Yeah, that'd be great.
They had a very good month. So the on average stocks that were in focus declined 17%. And if we take our two favorite references, so S&P 500 and RKK, so both of them were basically flattish since the start of May. So there we have plenty of alpha in spite of these two references being flat. So plenty of alpha for short sellers, obviously. So 17% is quite a bit. I guess you would agree.
Yeah, absolutely. I mean, markets have definitely bounced a bit lately, so to see them putting up strong numbers on the short side is a really impressive. So let's just dive into some of these new calls. Because we don't get a lot out of Europe, I want to start with the one European target. Can you give us some details on what's coming out of Europe?
Yeah, that's been by Viceroy. So they actually presented this short call on a conference in Europe, in Germany. So, and they focused their call on one venture capital firm. So initially, this venture cap VC firm had about 10 billion market cap. It's a French company called Sofina. Viceroy mentioned it's kind of French version of SoftBank, and they focused on valuation of this VC firm. So, in particular, they raised questions about one Indian investments which they have in their portfolio, and where they see a number of red flags. So they didn't, focus that much of Sofina on itself beyond saying that basically, you know, such investments raise doubts about Sofina's ability to create value for the shareholders. So they had a price target of minus 25% in mind, and actually this has been pretty much reached by now. So the shares are down, I believe, about 23% since they made this call. So a very quick win for them.
Yeah, now that's an interesting point because I just recently read I think it was a Wall Street Journal article that referenced D1 Capital,
Oh yeah.
who is coming under some scrutiny with the markings of their private investments. And so far through May, I think they were only showing a marking down of about 8% in their private books. So it is interesting because Tiger Global, I know they've taken a big mark down their privates. So this sort of questions that are swirling around the markings of private seems to be sort of a global thing and not just Europe or the US.
Let's see what happens with any further markdowns at D1. So we know D1 very well also from their public investment side. And just today, actually, we saw on European side also one interesting European short disclosure. So in Europe, unlike in US, the many managers have to disclose their short positions once they cross a specific threshold. And today we had a Coltrane appearing in one also public company that focus on investments in private companies, so one UK firm. So that's been that's been topical a bit already, it seems. So VC and private equity and short ideas around that.
Yeah. Well, let's turn to the next one in your report there. I see that Wolfpack finally made their first appearance of the year. What is their idea and what's the thesis behind that one?
Yeah, so as you said, we have been waiting a bit long this year for Wolfpack to come up with the first report, and unusually for them, they published on a biotech company. So most of us we know Wolfpack as a China hustle, short activists for their a lot of focus on Chinese ADRs and so on. And I was checking the records. I couldn't find actually Wolfpack publishing on biotech so far. So similar to Viceroy, this was also a quick win for Wolfpack. So they had a very quick event in mind. So basically, phase one data, so very quick catalyst, so near-term catalyst, which materialized. So data indeed disappointed, as was the thesis of Wolfpack, and the shares are now 30% down since they published their report just a few weeks ago. That's interesting to mention. We should expect soon another biotech focused report by Wolfpack. They just tweeted about that, and it seems that in this other upcoming report, they are expecting a zero. So let's see.
Okay, and let's turn to another popular one, Carousdale. What are they onto these days?
Carousdale being Carousdale, it's still to a good extent about let's call them meme or semi-meme stocks, so about the stocks that were or still are popular among retail investors. So it's another one where they focused on a stock that had a peculiar spike last year. So in this case, it's the ticker LVLG. So it's about 1 billion tech company that they focused on due to the allegations of a dubious product. They believe actually they will, so Carousdale believes the company is unlikely to ever commercialize their telecommunication tech. Company has been public around for a long time, and the Carousdale is very much skeptic about their product. So they did get a response from the company already. So it's what we would rather categorize as a boilerplate type of response. So not too many details and references to the points from the report itself, but more along the lines that short report is, according to the company, containing false and misleading statements. So that's the famous formulation which we often see. And also, they did mention that that the company stands. To all the statements they made. So let's see how that develops. Shares are now down about 15% since the report, and Carousdale does expect that the stock goes back to this penny stock territory, so prior where it was prior to the 2021 spike.
Well, I think we've done a good job of covering some of the new ideas, but uh, I'd just like to turn now to some of the updates on some of the topics that we've talked about over the past couple of months. I don't know if you saw the news, but just as a side note, I do see that Melvin Capital finally, surprisingly, decided to close their doors. Obviously, they're well known in the meme stock world for the getting caught up in the short squeeze. So, you know, Carousdale taking a shot at a potential meme stock. Caution there, I don't know, but
They've been very
there has been
successful.
one.
They've been very successful. Sorry to interrupt you, Mike. Carousdale did did very well in this area, but indeed, Melvin is big news.
Yeah, absolutely. But let's go to Twitter. I know Hindenburg published on Twitter regarding the private deal for by Elon Musk. What's going on with Twitter? Is there any sort of update in terms of the deal actually going through a lower price? Is Hindenburg still short? What's their view on it?
Yeah, so it seems that this past weeks have been all about quick wins for activist shorts, and Twitter is another one along these lines. So basically, what happened from Hindenburg's perspective, so from their shorting perspective, the shares did plunge more than 25% following their short call. So their near-term catalyst happened. So as we probably all know, Elon Musk started raising doubts about bots on Twitter and so on, and questioning the deal and so on. So basically, Hindenburg, after that plunge, did tweet out that they are not short anymore. That this ratio that they were looking at, so win to loss ratio has been much less skewed than initially it has been, and that they are moving on from this Twitter. So obviously, Elon Musk and the Twitter saga continues, and let's see what happens next. Next there.
I, for one, am fascinated to see how this one plays out because I did see headlines today that Twitter has agreed to Elon's request to share some user data with Elon. But there is sort of the whole debate there about how Elon had waived his right to due diligence. And so Twitter's view has always been that no, the deal's going to go through at the agreed upon price in the binding contract. So there's just so many different moving parts. I feel like every day we get some new twist to the story that, it's just, grab the popcorn.
Precisely, and with Elon, twists will keep on coming. So just this week, he tweeted about YouTube and how there are some scammy ads popping up there, and then we were left stunned that he doesn't have a premium YouTube subscription. So that's been also very fun one to watch as a side small side story to Twitter saga. So.
Absolutely. Okay, and just one last thing to touch on. Let's turn to Coinbase. I know Jim Chanos has been involved there on the short side, more so on the valuation aspect, not a call on crypto market itself. Shares have plunged recently. What's Chanos's view there? Does he still see additional downside? Does he still believe it's overvalued?
Sure, yeah, this one is definitely one that we are still keeping an eye on. So, Chanos versus Coinbase, and he did update basically his call. He was guest on one podcast.
So Coinbase was not a call on crypto prices. It was a call on what we thought was a sort of ancillary predatory business model. And what really kind of struck me was how much they were over earning. I mean, this was a company that earned $2 a share in 2020, which was not a bad year for crypto. They then earned $17 or $16 last year, and of course they're going to lose money this year. But what struck me was that they were the amount of revenue they had relative to the assets that were under their umbrella. And at one point, it got as high as 4%. It's now well below that. But 4% annually on the assets of your clients is just a stunningly large number. And money losing broker dealers, if you witness Robinhood, generally trade at 1 to 1.5 times tangible book value. And the tangible book value right now is in the low 20s at Coinbase, and by the end of this year, it'll be in the mid-teens. So this is still a
Yikes.
stock trading between $60 and $70, and it's just tremendously overvalued even here.
To summarize, he said it's still tremendously overvalued, Coinbase. So this is in spite of Coinbase being 60 more than 60% lower than when he initially went public with this short call back in March. And he did repeat what you just said. Okay, this is not really a call on crypto prices or broader crypto market. It is a call on what he believes is to an extent predatory business model with fees that will to a certain extent go away in the future. So keeping an eye on it, 60% down, but as per China's, still tremendously overvalued.
Yeah, it's crazy to see that there's so much activity in the short world still. Like you said, we're entering sort of that summer lull. A lot of stocks have come down by a tremendous amount. So it just kind of speaks to the environment that we're in, that we're still seeing a steady flow of these short ideas. And who knows, maybe it'll give us something to keep an eye on as we move into the summer that's normally a bit boring in the markets.
I hope you have some exciting things on your chopping block at zeros in front of us. So we'll be looking forward to anything there.
All right, Ivan. Well, thanks for joining me again this month. It's been great catching up, and I look forward to our chat next month.
Thank you so much, Mike.